We have just started 2026 year. The start was not good. So for the last 5 days, Nifty is consistently coming down. So yesterday I have received at least 10 to 15 calls. People started getting panic now because the way the stock fell for the last 5 days now, it's really very tough because the stock prices, some news are coming, stock prices are falling very sharply. But if you see 2025, it's basically a year of consolidation. Nifty around 10% gain we have seen, mid cap index around 5, whereas small cap minus 5%, mid single digit. So though it's a year of consolidation, most of the portfolio, if you see, either they are marginally down or marginally up, because some stocks did relatively well. So those who are holding that stock, they somehow managed to show around 10 to 15% gain, whereas those whose portfolio are totally oriented towards mid and small caps, their portfolio may be down by around 10 to 15% overall. So it's a year of consolidation, and it was a stock pickers year in 2025. But 2025, if you see, it's one of the historic year if you take for precious metals, because the gain was such that totally 4 major precious metals are there: gold, silver, platinum, and palladium. And if you see, gold has gained near to 70%, and silver more than 150% in a single year gain we have seen. So it's one of the highest return in a single calendar year. So in history, the 2025 year is going to be the year for precious metal. Platinum and palladium, they also have done very well. And with that, the base metals, especially copper, has gained very smartly, especially in the later part of 2025, because there is an expectation that they will run into shortages. Huge demand is going to come from data center. Because of that news, the copper price has went up. Similarly, aluminum prices also has gone up. So base metal also has done very well. And the other important thing in 2025 is that Indian market has completely decoupled from global market. Because if you see the most of the global markets, Asian markets, European markets, US markets, everyone was touching new highs and historic highs, whereas our market were on sideways and did nothing. So it's a complete decoupling for our market. And one of the main reason was that the tariff imposed by Trump, which has affected our market well, because of India is one of the highest tariff countries among the list, if you see. So till now the tariff issue is not solved. And if you see historically, this experience, ones who have there in the market for 30 years, 40 years, they would have had an experience of 1998. In 1998, what happened was that at that time Vajpayee was our prime minister. He conducted a nuclear test in 1998. Pokhran 2, that test was called as. And after India conducting the nuclear test, immediately the US, they sanctioned our economy at that time. So at that time, the news flow was not great. Most of them may not know it, because like now, no, we don't have social media or internet. So the news flow was less. But the US sanctioned India at that time for conducting the nuclear test. And Sensex, in the month of May only, India conducted nuclear test. So Sensex was around 3,800. Market was very patchy at that time, because 1992, Harshad Mehta bubble burst, scam came, and Indian market bubble burst. At that time, from 5,200, market fell very sharply. So even after 6 years, Indian market unable to touch the previous high of 5,200. So 1998, the Pokhran test India conducted. US did sanction on us, put sanction on us. From Sensex 3,800, it fell to 2,700. Almost a 25-30% correction India had in the matter of 6 months because of this US sanction. So somebody who is there in the market for long, who tracked the market for long, they immediately feel that because of very high US tariff on India, with very poor relationship with India, US having, that type of correction may come. So that fear will be there for those who are in the market for the last 40 years, 50 years. So the experience in the market, no, it's both as an asset, it will act as an asset sometime, as well as it will act as an liability sometime. Because whenever something happens, we will get the old memory, and then we will get a fear that the same thing may happen again, or like that, it may comes as an hindrance. So we have to see, because market all depends on the future. Not every time history will repeat. Uh, but as a human being, the old memory always hits us during the good time as well as on the bad time. And Nifty, if you see that in the last 1 month, it has corrected by around 1%. It's a Nifty, and a Sensex 2%. Mid cap around 1%, and BSE small cap around 2%. It has fell. It has come down in the last 1 month. And stock price reaction in the last 1 week was very violent, because what was happening was that 10 days, few days back, one news came that there are 3 ships nearing the Reliance refinery. Some Bloomberg news, they have put an article. There's 3 ships are Russian, 3 big ships are nearing Jamnagar refinery with Russian oil. Like that, one news article came a few days back. But after 4 or 5 days, Reliance on opening itself falling by 3-4%. So it's very difficult to believe, because Reliance Industries is a large cap stocks dominated by institutional investors. So without big institutional selling, Reliance Industry cannot fall by 4 or 5% on opening. Whether a big institution will react to a old news and sell on that day. So it looks very suspicious the way the markets are falling. Similarly, HDFC Bank falling by 2%, 3% without any major news. ITC at least fell because of putting higher taxation on cigarette. One day it fell by 11%. One of the biggest single day for a ITC stock. 11% it fell. At least some news flow was there for that a tax was too steep for the company. But still the reaction of stock is too harsh. So like that, some negative news is coming, immediately stock price are reacting. 2 days back, what happened was that one news came in Reuters that India is going to allow Chinese companies to bid for government project. Till now, the Chinese companies were not allowed to bid for government projects. Some restrictions were there. The news article says that the government has removed that restriction, is going to remove that restriction, so that Chinese company will can bid for government projects. Immediately, BHEL stock, which is in F&O, fell by 10%, hitting lower circuit. All the power-related big stocks like ABB, Siemens, and all falling by 5%, 6%. Hitachi Power, like that. So all these stocks, if you see, they are not very small stocks. They are big stocks where institutional interest is very high. Still, the reaction is too harsh for the news, which is not confirmed news. So I feel there is some suspicions on Indian market fall. I feel some foreign pressure or domestic pressure. They are taking down the Indian market. That's all my experience says. I may be wrong, but the way the stock price are moving indicates that the stock market is intentionally pulling down to put pressure on somebody. That's what the screen is saying. Yesterday around 3 o'clock, some news came on Manappuram Finance. That RBI, that one Bain Capital is going to invest in that company. So they are experiencing some regulatory hurdles. Like that, some news is coming, immediately stock price are falling around 10%. That news always comes during the market time, only that news comes. And the stock price reaction is too sharp. So that is what happening in many stocks, big stocks. And now the broader market started falling. For the last 2 days, if you see, they have started falling very sharply. Most of the stocks were down. The breadth is, if you see that the number of stocks falling is more than 2,000 stocks, and the advances were less than 500. That's what happening for the last 2 days. And the breadth has become extremely weak, and a lot of stocks has come down by 10%, 15% in the last week. And if you see by 2025, the 10th year of positive return for the Nifty. 10% gain we have got in 2025. And if you see the last 4 year average, we have got around 12, around 10% return we have got in the last 4 years Nifty return. One year very 4% return, another year 20, then another year 8.8, another year 10. Like that, if you see that almost 10% return CAGR we have got in the last 4 calendar year. But fortunately, market never went to gave negative return in the last 10 years. But 3 years of subdued return is there. 2016 3%, 2018 3.2, 2022 4.3. 3 years of subdued return. Only 2 years we have got very good return. 2017 28%, 2021 post COVID we have got more than 20% return. 2023 20% return we have received. But 10 years consistently we have got positive return. Nifty never went into negative. But the broader market says otherwise in 2025, where the number of losers were much higher than the number of gainers. If you see that the losers were 1,400, near to 1,400, whereas gainers around 500 shares only it is there. The number of stocks fell between 10 to 30% is around 600, 30 to 50% is around 400. So most of the stocks we are holding, no, it will come into this bracket only. Around 1,000 stocks, it will 10 to 50%. It has come down, most of the stocks. Gainers, though still there, but numbers are very less when compared to the number of losers. So that is the history of 2025, where those who are holding good stocks, they managed to show some return, but majority of the stocks fell into red, and most of the portfolio were down. And foreign institutions, the return were much better, because foreign institutions, when they take back the money, it has to be adjusted for currency gain or loss also. Unfortunately, Indian currency lost against US dollar, so their overall return was much lesser. Nifty, even though it has gained by 10.5%, the foreign institutional investors, they have got just 5% only, because the 5% they lost towards currency depreciation. Whereas some other market, no, it has given huge return. South Korea and all, if you see, it has given more than 70. Similarly, Brazil. Even in this chart, if you see that, our Indian currency is one of the few currencies in the world which has lost against US dollar. Take for Germany, if you see that, the foreign institutions, they have got much more return than the stock exchange return, because their currency has appreciated. So that is the reason why the brown chart is brown bar is larger than the blue bar. Blue bar is the local currency return, whereas it is the US dollar return. So in US dollar return, most of the market has given good return, except India. Indian, we have, because of currency depreciation, foreign institutions have lost it. So that is why the foreign institutions money is not coming in. Generally, if you see that, institutions generally chases the momentum or return. Even in our market also, if you see that, there are so many value stocks are available, but no one will buy now, because there is no momentum in it. But once momentum starts, it started going up, then positive news flows comes, they will come and jump. A stock will be trading at 100 rupees, it will be trading around 7-8 value PE ratio with no debt and all, but no one will buy it, because the stock has been trading for 100 for the last 2 years, 3 years, still no one will buy. But when it gets momentum to 130, 140, then positive news start coming in only, then only people will come. Only the contrarian investors, they buy at 100 rupees. So Indian market right now lags momentum. That's why the foreign institutions, they are selling and investing in some other market where momentum is there. This is the global equity ETF returns. If you see that, South Korea ETF has given almost a 95% return. South Korea ETF has given, as many European countries like Greece, Spain and all given 78%. South Africa 75%, Vietnam 66% it has given. And if you see the Eurozone, almost a 40% return they have last year got it. Last year is one of the historic year for many stock markets. They have done very well. World X USA, if you see, almost 32% return it has given. Asian market, if you see that Singapore 31, even China has given 31, France 28 it has given. So total world almost 22% return it has given. US market 17. So when you compare US market with other emerging markets and European markets, the US return is slightly lower. But if you see India, it's just a 2.7, almost bottom of the chart. It is the table. 2.7% Indian ETF has given return. Very few losers. Turkey 1.5 minus 1.5, Thailand 2.4, Philippines 1.5. So India is almost at the bottom. So that is why the foreign institutions are not coming into our country. So once momentum picks up, only they will come. Till then, only contrarian investor value buyers will be there. Because when you manage public money, when it starts underperforming, the investors will start asking the question, why you are underperforming. If you say that we are investing based on valuation is there, means out of 10, maybe 2 or 3 will accept that reason, but 5 or 6 they may not accept. They will take back the money and they will invest in some other fund which is doing better. So always if you see that the funds which are doing very well for the last 1 year, 2 year, in the immediate past term, that fund will get more money. Even in Indian mutual fund, if you see that, the funds which are doing very well for the last immediate past, last 1 year, 2 year, if a fund has given 50%, 60% return, and another fund was doing very badly, given 4 or 5% return, means most of them will take money from the 4%, 5% return fund to the fund which is giving 40%, 50% fund they will give. They don't see what is the portfolio this fund is having, that fund having, and they won't analyze too much. So only the near-term return only if they will take. You can give an example. A mutual fund called Quant Fund. It was doing very well 2 years back. From a fund size of some 1,000 crores, within 3 or 4 years, the fund size became 1,000 crore, 1 lakh crore, the fund, AUM of that fund, Quant. Because everyone was giving money, that fund was taking a very high risk and taking a lot of momentum stock. Their return was 40%, 50%, 60% like that. So most of the investors whose fund was not giving that much return, immediately they shifted part of their money to that fund. And similarly, if new funds, some new investors comes, means immediately that fund will be recommended. The people invest more in the momentum fund only, the fund which has given high return. But if you see in the last 1 year, that fund has significantly underperformed. Nifty CAGR return, if you see that, almost last 10 years, around 12% return Nifty has given. Last 1 year, 10%. Last 4 year, 10.7%. As I said previously, last 4 year CAGR is 10.7%. So one basic question, if I ask, what is the return we will get if we invest in Indian stock market on a long-term basis? So each investor will have an expectation, how much return. If you put in banks, 7% we may get. If you put in a cooperative bank, we may get 9% like that, 8 to 9%. In debentures, some triple B rated bonds, if we put, means we may get 10%. Very high risk cooperative banks, we may get 10, 11% we may get. So in equity market, so what should be the reasonable return we can expect on a long-term basis, 10-year basis, 15-year basis? So historically, if you see that the return expectation, the Nifty has given around 12% return, Nifty has given in the last many years. And even in the last 10 years, if you see that 12% Nifty has given return. So basically our expectation should be around that level only, 12%, 13% it should be. We should not expect a 20%, 25% by investing in stock market on a long-term basis, I am telling. Suppose if market is very on a bottom, for example, during COVID time, market collapsed. If you invested, means in 2 years, you would have doubled it because the situation was like that. But over 10-year period, 15-year period, around 12-13% is a reasonable expectation. If you are very good stock picker means around 15-16% we can expect. But coming to the market with expectation of 25%, 20 more than 20% on a 10-year period, 25 period will not happen. Primary market, it was extremely good, a very strong primary market. And if you see that in 2025, almost record money we have gained 1,87,000 crores. Totally we have got in IPO market. So one of the highest in the last 10 years. In spite of average secondary market, still primary market was very active. One thing which has changed 10 years, 15 years back and now is that primary market is basically a flipping game only now. So you block your money. If you get allotment after 3 days, after 5 days, you will sell it. So that's what happening. Most of the retail investors are seeing as not as an investment, primary market, just a flipping game. If you get allotment, you will get 30%, 40% return. Then you sell it on the day of listing or within 1 month you sell it. That's what most of them are putting money in the IPO market. Whereas 20 years, 30 years back, it was not the case. Those who are getting allotment, they used to keep it for years. But it's not. But the situation is not like that now, because the results you immediately in the third day you are getting whether you got allotment or not, you will come to know, and within a couple of days it will get listed, so that within a week you can block your money and you can get back the money in a very short span of time, like a lottery only most of the people are seeing, and most of them are not getting allotment also. So basically primary market has become as a lottery for retail investors. As I initially told, it's a precious year 2025. See, silver almost 145% return it has given in dollar terms. In rupee terms, is still higher. Gold almost 62%. Platinum 124 and palladium 82%. So all these are huge returns. Historically, if you chart it means only 1 or 2 years will be there for silver which has given this type of return. On domestic front, if you see that one sector which is doing extremely well is the auto sector. So government has reduced the GST sales, then interest rate, RBI has reduced the interest rate, then there is a cyclical recovery in the auto sector happened. Almost all segments of auto is doing well, while the passenger car growth is much less, but all other segments are doing exceedingly well. Historical growth they are showing. And if you see the tractor sales, M&M has shown 34% growth, Escorts 36%. This is the December sales, and VST Tillers 26. So domestic tractor sales is up by 36%. So one of the historical sales growth they have shown it in the month of December. Very rarely we can see this type of sales growth. Passenger vehicle, Suzuki, December sales only, this is only domestic only, exports are not included, 36%. Hyundai is not showing much growth. I don't know why they are consistently underperforming the car market, passenger sales market. Tata Motor 14, M&M 23, Toyota Kirloskar 58, similarly like that. So overall, almost 27% growth is there. And many are saying that month on month it has come down. See, for auto sales, we should not compare month on month. Only year on year should be seen, as well as quarterly sales we can compare. Month on month we should never compare, because there is always a seasonal. In March the sales will be very high. In April the sales will be less. December the sales will be less. 2 months, October, November, the sales will be different. Depends upon the date of Diwali and festive dates. So month on month we should not compare. I seen that somebody is saying that month on this auto sales figure we should not take it seriously, because month on month the sales is down. Month on month we should never compare in auto, because of the seasonality of the business during that year. So the auto sales is very strong. The tractor sales, passenger vehicle, Commercial vehicle, if you see that, very strong growth. Tata Motors 22%, then Ashok Leyland 20%. This is the Eicher Motor division of a commercial vehicle. Eicher that has shown 26%. That has shown. Ashok Leyland 26%. It has shown growth. Almost all companies has consistently shown 25% more than sales. So total domestic commercial vehicle sales is up by 26%. So that's why 1 month back we recommended a company called Jamna Auto. So they supply leaf springs to almost all these commercial vehicle companies. So it's a seasonal business. Generally, what is to it's a cyclical business, not a seasonal business. It's a cyclical business. The cycle generally used to be every 5 to 6 years. No, the sales will peak out, then again it will come down like that. So now the sales as of a commercial vehicle is very strong, and that is the reason why we have recommended that Jamna Auto. Similarly, three-wheeler sales also has been very strong. TVS Motor, M&M is very strong. Two-wheeler sales, Hero Motor 43%, TVS Motor 54%, and Royal Enfield 37%. So total domestic sales up by 46%. So these type of sales figure we rarely see once in a decade or once in 15 years only. This type of growth we have seen. So because of strong auto sales only, we have recommended a NRB bearing. Based on this data only, we have recommended. Last time we recommended this Jamna Auto. So NRB bearing 70% is domestic, 30% they export to big European companies like Benz, Daimler, like that JCB they are supplying. Yeah. So valuation was reasonable, around 16-17 PE it is trading. Whereas if you see the other MNC bearing companies, Schaeffler, SKF, Timken, they are all above 50-60 PE. So valuation was relatively less. They spend a lot of money on R&D also, and some of the family settlement they have done, and looks reasonable value. So even if we are wrong, means we are not going to lose money. Suppose some re-rating happens, the valuations goes to 25 PE, means the stock price will go up. Earnings will go up, stock price will go up. So that is why we have recommended that. Based on that thesis only, we have recommended this NRB bearing. Two-wheeler exports, see, the other thing which is very positive on two-wheeler is that almost all two-wheeler stocks are doing well. If you see that TVS Motor, one of the best performing stock in the last 6-7 years. The price never corrected, and now 3,800 rupees or something. Similarly, Eicher Motors more than 7,000, Bajaj Auto nearing to 10,000, and the other one Hero Motor, that also has done reasonably well, though it's a big underperformer among two-wheelers. So one reason why the two-wheelers is doing very well is that the domestic sales is very strong. Even before domestic sales going up, their export business was doing exceedingly well. They exports throughout the world, and their business is doing very well. And if you see that the April to November, December also very strong month on exports also, but this was not included for December. April to November, fairly a long period. The exports growth was 14%. For TVS Motor, it is 35% of the export growth. Hero Motor 49%, Yamaha Motor is an unlisted company 24%, Honda Cycles, which do this Activa, 19%. So exports is doing exceedingly well for the two-wheeler company, and that's why it's firing on both cylinder, both domestic and exports. Many times I have told that if you have some competitive edge, even if you put tariff, someone will come and buy. If you put whatever tariff you put on China, still Chinese goods will sell throughout the world, because they are giving at a very low rate with that quality. They have huge competitive advantage in manufacturing. That's why their goods are selling in spite of whatever action you take on them. So if products are good, rates are reasonable, means definitely it will sell throughout the world. So two-wheeler is one segment where India is doing very well globally. So what we can do, either we can buy two-wheeler stocks Since two-wheeler stocks are 10,000, Bajaj Auto is 10,000, we may hesitate to buy. TVS Motor 4,000. So that's why we are giving small stocks like NRB bearings, Jamna Auto, Auto Ancillaries. Precall we recommended 3-4 months back. That also done very well. They fully supply to TVS Motor. That digital display is extremely good. Precalls. The other positive apart from auto sales, the other positive we are seeing is the credit growth cycle. So it fell to 9%, now gradually going up, it is near to 12%. So that is one positive which is happening now. Suppose if tariff issue was not there, means definitely our economy would have seen huge positiveness. Because of tariff, it has played it has spoiled the overall mood in the economy. Q3 revenue and profit expected to grow around 11% for Nifty. That's what the overall consensus estimate is. And sectors which are likely to post good results, auto companies, as I said before, the auto sales has been exceedingly good. So auto companies will post very good results. In financials, NBFCs will post good results, whereas banks results will be average only. The PSU banks and others, the results will be average only. They are not going to show much higher profit, whereas the NBFCs will post good results. Defense company, they are also likely to post good results. Metals, as we know that the metal prices are going up, so metals also is going to show good results. Telecom companies, only two companies are there, Bharati and then the Reliance will come, telecom, that also going to show good results. Then capital goods company to do well. So these are some of the sectors which are going to do well. Sectors which are not going to be to post muted results, banks, the PSU banks, HDFC Bank profit is expected to grow by around 10% only. It is the consensus estimate is. Cement, pharma, IT to post muted results. IT, Monday two big companies are coming, TCS and HCL Tech, and Infosys will come next week itself. So the expectation is very muted, except the rupee depreciation has happened. Not much major growth is expected in Q3. So the second major event is the union budget, which is the date not yet confirmed, but most likely it will be on February 1st, and it is going to be Sunday. This time February 1st is going to be Sunday. Historically, if you see that whenever union budget is there, exchanges used to open on that day. So Saturday, one time, two times I think, came on union budget fell on Saturday, and both days the market was kept to open. Most probably, if February 1st is going to be budget, means NSE and BSE, they will keep open, and market will be trading on Sunday. Maybe first time on history, it is likely to be on Sunday, the trading. Most probably it may happen. The date not yet confirmed by Finance Ministry, we have to see. And in those days, in 1990s and all, the budget used to be in the afternoon only. Around 3 o'clock, they used to present the budget, and we have post-market trading. At that time, NSE post-market trading, post-budget trading will be there, which will be around 6 o'clock evening trading will be there. So what my expectation is that this time no major tax relief is not going to be there for individuals, because already the IT slab was changed significantly last year. The GST cut has happened, and moreover the government revenue is not in a good shape, because during last year, the current year they are expecting the revenue growth of 11%, whereas in the first 7-8 months the revenue growth is almost flat. There is no growth at all, and still lot of them, IT assets, they have to get refund also. So government is not taking time to give refund, which shows that the financial position is very tight on government. And the second important thing is that now the 8th pay commission government is discussing. They have started working on it. Most probably by 2027 or 29 will be the election. So 1 year before, generally they used to implement it, and it will give all the arrears. That will be the huge burden for the government. It will come in 2 lakh crores something, it is going to come. So with that huge liability, a couple of years from now, government is unlikely to give any major tax relief That's what my expectation is. Maybe some shops may be given for manufacturing sector, those who are putting new plants like that. But for a common man like us, we should not expect much from this budget. Maybe small changes they may announce, where the revenue loss may not be there, but maybe some sentiment boost will be there for the market. Like for example, buyback. Right now the buyback tax is highly complicated. Maybe they may shift that to a capital gain. They may treat it buyback gains will be seen as a capital gain miss. That will be a huge boosting for the market, because many cash rich companies are there where they are not doing buyback because of this complicated tax issue. Maybe these companies may announce buyback, and some of the mid and small cap company, even some large companies, they may move up, because if this buyback tax calculation, if they change it, that will not be a huge revenue loss for the government. Still, it will be a sentimental boost. Maybe I am expecting this type of cosmetic changes, where the revenue loss may not be there for the government. Capital expenditure will remain strong, but if fiscal deficit goes up, revenue losses there means, then the capital expenditure government may have to cut. Then private capex, these announcements will be there, efforts to boost private capex, that may be there in the budget. And the another important thing which is going to have next week is this US court opinion on tariff. So actually yesterday the schedule was there, but Supreme Court said that they came after a long leave, New Year leave and Christmas leave. They were unable to prepare the judgment on it. So they have postponed to January 14th, the legality of Trump tariff. So already in lower court told that it is the Trump tariff is illegal. They have told that. Now it has gone to Supreme Court. So it's one of the important day to watch, 14th January. That is on Wednesday around night 8:30. The opinion will come from Supreme Court, and they are going to tell the legality of the Trump tariff, whether Trump has power to levy tariff like that. See, generally a complicated actions, no, it should go through Congress. That is like our parliament, no, it has to be approved in both Lok Sabha and Rajya Sabha. Like that in US, it has House of Representatives and Senate. It has to be passed like that. Just a president cannot decide whatever he can do. He put it under some emergency law. He has levied this Trump tariff, this trade tariff, and that legally they are of the opinion that the president don't have power to levy tariff under emergency act. They are telling it. So Wednesday we will come to know. So even suppose if the verdict goes against Trump, means he will try to levy on a tariff on some other act, but it will take time. It has to pass through the House of Representatives, Senate, like that. It has to pass through as per US Act. But still it will be a big setback for Trump, and they have to give refund, and we have to see what court is going to give. What we are hearing is that they are going to give a mixed verdict. That means the Trump don't have power to levy a tariff, but whatever collected, let it be, no need to give refund. Like that, some mixed verdict it is going to come, like that only we are hearing. The other thing today morning, what Trump told was that in US, the credit card companies should not charge more than 10% interest. Like that he told in the morning. See, whatever he is making some complicated announcement, everything will come only after the Friday market close only he will announce. Most of you can watch. What he is trying to do is that he don't want market to react for the next 2 days. Whatever he will announce a big thing, but he announced a credit card companies cannot charge more than 10%, means a huge setback for US banks, because most of the revenue comes from them, from trillions of dollars. They are getting revenue only from charging high interest rate. If their interest rate is going to be restricted to 10, means what will happen? Either they will stop issuing credit cards to most of it, or they will stop business. Only this they cannot. What Trump says is that they are charging 20%, 30% and stealing money from US citizens, like that he has told. But he told it after the market close so that markets will not react for the 2 days. Then Monday before market opens, he will tell some other thing. Whatever he does, no, he don't want markets to fall. But he will tell a big thing, but he will not allow markets to fall. Last week what came was that he told about the Peninsula after the market close only he announced that. This is the foreign institutional. December, again they have sold 34,000 crores. They have sold it. So for the last, from July onwards, again the selling started. In January, daily they are selling, in the current week, no, daily they are selling 3,500 crores. Around they are selling it. So the selling has again restarted on foreign institutionals. April, May, June, some positive was there. Last year, October to February, they sold heavily, more than 3 lakh crore in cash market. Again, from July onwards, the selling has started. Only because of SIP flows in mutual fund, our market is standing. Otherwise, what would have happened is what I told in 1998, after Pokhran 2 test, Indian market fell by 25-30%. Indian market fell at that time, Sensex. From 3,800, it came to 2,700 level. So similarly would have happened, but thanks to the domestic flows, SIP flows, consistently going up. In last 2.5 years, almost doubled. July 2023, it is 15,000 crore. Whereas in December 2025, it is 31,000 crores. Almost doubled in the last 2.5 years. So it's a perennial flow of money for mutual fund, which are giving support and flow to the market. So near-term view, this US-India trade deal is crucial for our markets to bring back momentum. Otherwise, we are going to see sideways movement only. And it will remain a stock pickers market. Even in this market, some stocks will do well. Events to watch, this union budget is on February 1st. Then US trade tariff is there. So coming Wednesday, one important event, US Supreme Court verdict is opinion is there on legality of Trump tariff, and then the Q3 earnings. So these are the events to watch. Okay, thank you.